where are we in this cycle? In which innings?
Very, very early on. We may
Still
still
early.
be in the down cycle, and I'd buy the hell out of them. I would buy the hell out of them.
Yeah. Okay. Our time is limited, so I have to move further. And what I would like to do is ask questions because my audience sent a lot of questions. I don't
Right?
know how much time we will have. I try to manage the time as well. And also, if you could grade some companies for us.
I will try.
So, connecting to what you just said, you just returned from Beaver Creek, and I think the sphere there is much better now than 2 years ago, perhaps. So, what is the big picture for you? The gold price is skyrocketing, but still
Yeah,
there is a yeah. I'll let you talk.
the mood at Beaver Creek was not ecstatic, which is good.
Hmm.
If I go to a conference and everybody's feeling ebullient, I
Mm.
leave feeling scared.
Yeah, yeah, yeah.
And I liked the fact that people were feeling scared. I liked the fact, too, that there weren't very many check writers there.
Okay.
Most of the people that were there were hustlers. They were issuers looking for money. If you have a few check writers and a whole bunch of check cashers, obviously money is still in fairly short supply. As a supplier of money, that's a good thing for me. I had some wonderful, wonderful conversations. So it was useful for me. Now, the truth is, in the last 50 years, I've been to a lot of conferences, and I needed another conference like I needed to be shot. Uh, but I'm a loyal guy. I go way, way, way back with Jessica and her late husband, Igor. When I say way back, I mean 30 years back. And when she asked me, and more intelligently asked my wife to come, I went. I'm delighted to be home, and I'm delighted that I went.
Okay. And sometimes I feel that the so we are not at the high point yet, because sometimes I feel that even the sector does not believe yet. What I mean is that if
Very good.
I followed the company presentations as
Yep.
well, and a few years ago when the gold price was 2,000, then they still used the price of 1,500. Now
Right.
it's 2,500, 2,600. They still use 1,900, maybe 2,000. So they still don't believe yet. So they yeah, and you follow probably some different metrics like operational margin cycle, the price per nav, project expenditures, part of the budget, right? So where are we in this cycle? In which innings?
Very, very early on.
Still early.
We may still be in the down cycle
Okay.
because we're in a situation where the veteran investors are still largely absent. An example, the Sprott actively managed funds, which are managed by John Hathaway, a legend in the business, have been until very recently uh, having outflows, not inflows.
Yeah, yeah, yeah.
And the stocks that seem to be moving on the TSXV are more narrative stocks than value stocks, which is to say people are still buying stories as opposed to reality.
Mm-hmm.
I like that.
Yeah, yeah.
I like the fact that most of the money that's in the sector is dumb money, that the smart money is still absent. I heard, and I'm not going to name the name because I haven't verified it yet. I heard a story there from a company that's in production that suggests that they are selling at about 1.2 times 2025 cash flow. That they have 10 years of reserves in their current location, and that they are selling at about 25% of net present value.
Mm-hmm.
Uh, this company, I believe, and I'm not going to name them, so don't ask me to. This company, I believe, has in one of their deposits a lot of exploration upside. And I believe that they have durable competitive advantage in the district and in the country to bolt on other operations. What that means in terms of my speculative criterion is I want a company that's selling for half what I think it's worth, not going to be worth, half what I think it's worth. Check. I want a company that might but doesn't have to dilute free cash flow. Check. I want a company where my estimate of what it's worth can double in the next 2 years. In other words, I want it to be selling for half what it's worth, and I want that what I believe it's worth to be able to double within 2 years from circumstances that I understand. Check. And I want to believe that if all things go right, answering some unanswered questions, that I could conceivably within 5 years have a 10-bagger. Check. All the checks are checked. Now I need to understand whether or not, to the best of my ability to understand it, all of those assertions are true. It's very rare that you come into a speculative circumstance where people that you respect run the company, where people that you respect are shareholders of the company, where geologists that you respect are on the company payroll, where they are financially solvent, where they're selling for half what they're worth, where what they're worth could double, and where conceivably you could enjoy a 10-bagger. The fact that that circumstance was present at Beaver Creek, and the fact that I was only able to hear 40 of the stories that were there, so that this opportunity came from a relatively constrained base, I think is very, very attractive. I heard a story today, and I will name this one, at the Rural Classroom,
Yes.
Lumina Gold. I had Ross Beatty there, and he told me about a preliminary economic assessment valuation from 2 years ago at $1,700 gold. If my memory serves me correctly, at $1.3 billion. Now, a PEA is a preliminary document, but it's a target. But you put that against a market cap of $200 million, and you put that behind a serially successful guy like Ross Beatty, you got to listen. This story isn't told by the Three Stooges. And it says a lot about where we are in the market. Where we are in the market is that there isn't very much of a premium for a pedigree. And there needs to be a premium for a pedigree. What's selling is narrative, not reality. The idea that I can trade narrative for reality behind a pedigree is a pretty attractive market to me.
Yeah, and the first company, so it was a great discussion. I recommend it to everyone. And the first company could be also in Mexico. Can you tell that? Yeah, who knows? Yeah, there are multiple examples, I think. So
I need to say, I sat through 40 presentations.
Yeah. There are many examples.
20 of them were, from my viewpoint, not worthy of further discussion. 20 were. That means that 50% of the discussions I heard were worthwhile. That's a very, very, very high hit rate. Now, going into this, I knew that some of these companies I would like. I'd done enough work before I got to the conference that I just wanted to hear the management team tell me the story that I had understood from due diligence.
Yeah.
So that was useful, but still, the overall valuations for the better exhibitors there, I thought were interesting. And the fact that there were very, very few check writers there was also interesting. Lots of investment bankers, lots of guys trying to earn fees, lots of people trying to hustle projects, lots of guys trying to hustle each other to get to buy stocks. But the community of living, breathing check writers was very, very, very small. And while that doesn't say a lot for near-term share market appreciation, it says a lot for valuation, and I care more about that.
Yeah. Okay. I understand. And maybe even the gold ETF had outflow until 1 month ago or something like that.
15
Interesting.
15 weeks ago.
15.
15 weeks ago, we began to see
Turning point.
net flows.
Okay.
That is to say, no disintermediation from the physical ETFs.
Okay. So you were writing checks and also gold, silver, you don't have to look uranium, copper, or nothing is hated anymore. Do I understand it correctly?
No,
But
stuff is
beside
hated.
that, nothing.
I think North American natural gas is really hated,
Yeah. No question
and
about that.
that's an attractive business to me. I welcome the hate. What I'm attracted to, not now, but in the future, are the commodities that disappointed 3 and 4 years ago. So sulfide nickel, you'll remember
Nickel,
the
yeah.
battery craze. Everybody had to have a nickel stock. All those nickel stocks got cut in half or 60%. I think they're going lower. I think investors will hate nickel with the same passion that they hated uranium. And that'll be good for me.
Yes.
I'll be the pawnbroker. They hate PGMs too. And the fact that they hate them makes me like them. But the fact that PGMs are mostly produced in South Africa and Russia means that there's a chance, not a certainty, but a chance that there will be socially inspired production disruptions. And if they were, you'd enjoy an immediate double in those metals. So that attracts me.
Yeah.
But the thing that really attracts me looking forward is the place where there's the most jilted lovers. The people who had the highest expectations and had their expectations dashed. And that's a lithium business. Now, we aren't at the bottom of lithium or the lithium equities yet. Lithium ran up like crazy, not because of a shortage of lithium, but a shortage of lithium processing capacity relative to demand. A lot of people, when the lithium price went up, went to look for more lithium as opposed to building more lithium process capacity. But the four big lithium processors worked adding capacity like mad. Once they added it and the supply came on the market, guess what? The price collapsed. Now, there's a surprise. On the other side of the ledger, everybody went looking for lithium. And given that we'd never looked for it before, it was pretty easy to find. And we found a ton of lithium. The lithium companies with these newly minted projects used to have 3, 4, 500 million market caps. As they try to cram these projects into a production pipeline that's already crowded, I suspect that these market caps will fall to 10 million or 20 million. And I suspect that the people who were falling all over themselves to buy them for 300 million will be falling all over themselves to sell them at 10 million, just in time for the lithium market to find its feet. So I suspect if you and I are talking, and I hope we are, in 2026, 2027, that I'll be banging the lithium drum the same way I banged the uranium drum the first time that you and I talked. We're not there yet. Don't crowd into the lithium yet. But you asked me what's hated, and I think the hate that lithium will experience 18 months from now will rival the hate that uranium experienced, and will be greater than the experience that the junior silver stocks had in December of last year and January of this year, which was pretty extraordinary.
Okay.
So I'm looking forward to that.
Yeah, me too. And we had also a battery metal bootcamp
Yep.
with you, and there it was the same story.
Yeah,
You
we didn't
forecast.
talk about lithium so much then because the price was 50% higher.
Yeah.
But the price has absolutely collapsed,
But
which I love.
and the message there was as well that the processing companies have
Yep.
the near-term future.
Yep.
Yeah. Okay. Good. And I have a chart for everyone. I will show also on the screen. So here we see the S&P 500 versus the commodity ratio.
Right.
And it is cyclical, very nice. But in the last 8-10 years or so, it's something like flat in the bottom. So why does it take so long? Well, I have a theory, but
It takes too long, I think, for three reasons. One, the sin in natural resource stocks
okay.
needed to be wrung out of them. Investors needed to say to mining companies, you will be good boys in the future because you've been bad boys in the past. So there was a reputational problem and there was a performance problem. Most of the people who caused that very poor performance in the decade 2000 to 2010 have been allowed to pursue other employment opportunities, which is to say they're gone from the sector. And so I think we're on the way to curing that. The second thing that happened is that the S&P 500 did extraordinarily well because it was faced with extraordinarily benign times. Falling interest rates, falling cost of capital, strong equity market, but also very strong corporate performance. When people say to me, you know, Home Depot has a market cap that exceeds that of the entire gold sector, I was forced to say, well, unfortunately, that's true because Home Depot out-earns the gold sector. If price actually comes down to earnings, there's a reason why Home Depot is worth more than the gold sector, because it is worth more than the gold sector. A circumstance where the gold price rises, where margins increase, if the industry can constrain itself from doing the same stupid stuff they did in the decade 2000 to 2010, that will change. And a period of tighter credit with less economic growth and less ability for Home Depot to sell renovation and construction materials to homeowners means that that circumstance might change. I think, too, that investors have been schooled to general market and technology securities. I'm not going to comment on the valuation of the S&P 500s because I don't know how to value technology stocks. I don't even know how to value Home Depot. But I would suggest that investor psychology is resting on 4 benign decades, 1982 to 2022. And they're applying yesterday's lessons to tomorrow's economy. That happened to me once before in my career. In the early part of the decade of the 70s, we were coming off a general securities market that was absolutely buoyant as a consequence of really benign economic times in the United States, beginning with the end of World War II and going through 1970. When things changed, when structural debt and deficits in the US economy met inflation, the outlook changed, but the market's perception of the outlook didn't change for 2 or 3 years. And I sort of believe that past is prologue with regards to that. I think that investor perceptions were formed over 4 long decades.
Mm-hmm.
I think that the underlying markets changed in 2022. We'll see. And I think that perceptions will change over the next 2 or 3 years.
They always do.
They do.
From time to time. And what do you think about that? If I look back in history, if there is a bubble in an asset class, the next bubble is never in the same asset class.
Correct.
So if we have now an everything bubble except gold, what could be the next bubble? You know, it's self-explanatory. Gold or commodity sector is a good candidate. We'll see.
I think that depends on what causes the last bubble to deflate, if not burst.
Mm-hmm, mm-hmm.
Let's say, as an example, and I'm not saying it's going to happen. I'm not an economist. I'm a credit guy. Let's say there's a credit problem, though. Let's say that there's a replay of 2008. As you may know, I'm very concerned about junk debt ETFs and the credit contagion which might occur as a consequence of low-grade corporate debt. If that happened, if these junk debt ETFs blew up and we had a credit contraction like 2008, I think that you would see high-quality financial services institutions fall by 90% in price. And I'd buy the hell out of them. I would buy the hell out of them.
Yeah.
A bank is a great business. A well-run insurance company is a great business. An asset manager is a great business. A money manager is a great business. And I could see from the ashes of destruction a major boom take place in financial services because there's still so much cash on the sidelines. But I could see booms happening in resources too. The idea that, Ross Beatty showed us a gigantic, admittedly low grade gold deposit in a country, Ecuador, that people are afraid of, with a 200 million market cap and a $1.3 billion net present value at lower gold prices. We need to check his whole story when he talks about all-in sustaining capital costs, AISC costs at $800 an ounce. We need to look at that and see how true it is. But I can tell you, Ross Beatty's told me a lot of stories in my life. And more often than not, they've come true. I'm not saying that people should run out and buy Lumina Gold. I'm saying that if you are looking for a place that's ripe for a bubble, the high quality juniors, not all the juniors, not the GDXJ, a well-selected list of high quality juniors is a wonderful place to look. It wouldn't take much for a 20 million ounce deposit in the right gold price to be worth $3 billion. That's not out of the question.
Yes.
$3 billion over 5 years from a $200 million start is a not unattractive return.
Yeah. Okay. Our time is very limited, so I have to invite you back because I have hundreds of questions.
I'm delighted by the process.
But if I may ask, one more thing is a battle bank is buying a bank, a jurisdiction risk, right?
We hope.
Okay.
For people who follow Battle Bank, we, like a whole bunch of other startup banks, have been stuck in the FDIC.
Mhm.
The FDIC, in their defense, every time a bank gets into trouble, the FDIC has to fix it. That seems to be happening weekly now. And every time a bank gets into trouble, my application goes deeper in the stack. So what we hope to be able to do fairly shortly is announce that we are recapitalizing a small bank that simply needs more capital, doesn't have problems, they're just subscale.
Yeah.
A bank that's on the FDIC watch list, but not on the bad boy list. If we do that, we will finally be able to commence operations. And my hope is that in the next 4 weeks, you know what, that's too optimistic. The next 6 weeks, that we will be able to agree with the management and owners of that bank, and also agree with the regulators to superimpose our business plan and our capital on that bank and finally get going.
Yeah, I hope for you. Yeah.
Thank you.
A lot of people are waiting for that. Yeah.
We started EverBank, as you know,
Yeah.
in the year 2000, and we grew that bank from zero to $28 billion in deposits over 14 years. What's relevant in that discussion today is that we started that bank with a customer backlog of 0. The backlog at EverBank is almost 15,000 customers. My confidence level that when we open the bank on the deposit side of the ledger, that we're going to open with a bang, is 100%. 100%. We went out to our database and we asked how many people would be interested in beta testing our systems to help us get ready to open. Over 2,000 people said yes. Deep engagement. They are willing to invest their time in our bank without having money. I mean, not to increase their yields, but just to help us open the bank. 2,000 people out there who aren't able to do business with us are willing to voluntarily help us get into business. This is unbelievable.
Yeah, it's a great start. So congratulations.
Thank you.